Okay, well, this is something new we're trying. Just got a new computer, and we've got all sorts of bells and whistles. If you've ever bought a car, the equivalent on our computer would be we got the undercoating if you live back east, or if you live out here in the west, we got the desert protection plan. So let's talk a little bit about the market, and then maybe throw out a fun fact or two, and we'll wrap it up in just a couple of minutes. Keep in mind this is new, and we're going to try and make some improvements as we go. Market had a very good day today by any accounts. In fact, it's been a good couple of weeks. To be clear, the S&P 500 was up 1.04%. That's good. That shows demand for stocks, at least for the short term. We'd be curious to see how long it can last. Obviously, I've been bearish. I've caught a big chunk of the ride up, but I have missed a healthy chunk. My spread against the market was probably close to 5.5% a few months ago, and now it's closer to maybe 2.5 or 3%. So clearly I've given some of that lead back, but really I don't care, and this is kind of an important point to make. It's a good point to make, which is you're not always going to be right. I've been writing this since the start of the blog. Over time, you're going to get stuff wrong, you're going to get stuff right, and it's probably not something my partners want to hear, nor is it probably something that clients would really want to hear. But how we do this summer really doesn't matter. We've got no client on board where this summer really means anything to their long-term financial goal, or whatever it is they need their money to do. It's tough to grab onto, but that really needs to be in the forefront, especially when you're your own portfolio manager, just trying to stay close, or whatever it is that you're trying to do. If you're trying to hop around and chase heat, then these are empty words for you, and I understand that. There are plenty of people that like to trade and like to make a lot of money. One thing I would note that I don't think I heard today on regular CNBC, some of the European Central Bank guys are getting more and more hawkish. This is important. It's going to continue, and this creates a headwind for the dollar. It doesn't mean the dollar has to go down versus the euro. I think it will, but it creates a headwind. It's an obstacle that the dollar is going to need to overcome. Higher interest rates in Euroland is going to create more demand for the euro, and that may come at the dollar's expense. We'll just have to see what happens. One little fun fact for you is coming from Turkey. The Turkish economy grew 7.5% in the second quarter versus the second quarter of 2005. Just a fun little fact. There's probably nothing you need to do with it. That's about it for today. Again, this is just kind of a trial run on the new computer with some new gadgetry. I think you can leave comments on the way I'm going to post this, so please feel free to let me know what you think. Maybe we'll flush this all together, or maybe it's something we can do every once in a while. And as you can hear, the dogs are calling, so that's it.